The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Hey traders, Stacey Burke from Stacey Burke Trading. Today we're going to be reviewing inside days. We'll be answering some questions that have come up, but we'll also just be looking at the difference between just having a signal day, but understanding what a best candidate setup should look like. Several traders are messaging and emailing and asking questions about it. Is this a first red day? Is this a first green day? But I asked the question repeatedly, what setup have you mastered? It's not a guessing game. We're looking for specific templates, front side, back side, that offer traders a parabolic opportunity. They may not be in the session that you're trading. It may have left the station already. There may be a low-hanging fruit opportunity. We'll review that, but we'll just keep this very simple, understanding what a best trade candidate template should look like, how it should set up on the day, how price should behave, and how traders with our basic model for trade entry criteria can have a simple, easy, zero stress, zero emotion, rinse and repeat trading process. Now we're going to take a look at an inside day, and I want to repeat the importance of simple rinse and repeat. What that means is I'm looking for the same setups when I get a signal day, because when I get the same type of setup, there's a high probability that I may get a well-engineered template on the day for pump and dump or dump and pump parabolic explosive trade opportunity in my session. I'm not trying to figure out what the market's going to do. I'm just looking for the signals and then how those markets set up. And we'll take a look at two specific examples from this week on how we saw almost identical opportunities with inside days, front side and back side. On gold on Monday, we had a market that closed as an inside day. Page 69 in the playbook. There are false break opportunities and trend trade opportunities. We're heading into day 2 on the front side of the week. Day 2 typically expands the range. Friday's our closing range of the week. Monday is our new day 1, the opening range in a new week. So our closing range, our opening range, day 2 typically expands the range on the front side of the week. When Tuesday begins to trade, the market makes lower lows in Asia, proceeds to go even lower in the London session. This is not a false break. False breaks break out and reverse and head to the other side of the range. Day 2 is expanding the range. We have inside bar traders triggered into the markets, which means that if this was a false break, they would be targeting potentially the high of Monday, the opening range of the week, the high of the week. We have a market that is now making lower lows on the inside. As we head into our U.S. window, the market engulfs the high of the day to closing price before coiling sideways, and the second hour, 9 a.m. opens. We're inside of our basic model for trade entry criteria, page 29 in the playbook. And this market breaks down beneath closing price, coiling sideways into our third hour. An additional opportunity for traders to add positions into an existing short trade, breaking out of the inside day. Day 1 is Friday, day 2 the inside day on Monday, day 3 blowing off in the direction of our initial range expansion on day 2 on the front side of a new week. Traders can either take profits at a measured range expansion, a 100% expansion. It's not Fibonacci, it's nothing else. It's 100% of our original high-low box projected down as a potential profit target. This is called classical charting. Rectangular range expansion, measured move for a profit target on day 2, the front side of the week. Thursday, we had an inside bar signal day on the pound New Zealand and the euro New Zealand pairs. We had markets that opened on the week in breakout. They closed in breakout on Friday, closed in breakout on Monday, continued to break out on the back side of the week on our reset day on day 3, Wednesday resetting to a day 1, and Thursday closed as an inside day. Now, similar to what we just saw on gold, we saw a market make lower lows on the inside, breaking down further into the Asian session, differentiating from a false break inside day template. So very similar, we have a high of week peak formation now in place. We do not start the day count until the daily low of day on the inside day is broken. This is not a failed breakout until we break a new low of day level. The breakout of Asia continues to make lower lows. The market pumps up at the end of the Asian window into the Europe session. We have 25, 50, and 75 pips of rise. There are 3 levels of rise, pumping up into the last peak formation made prior to the close of the day, our inside day, in the London window. We lower lows on the inside again as our US window presents. Major red news first hour, peak formation in place. That market retests that second hour before breaking down at the New York Open, coiling sideways at closing price, and a parabolic collapse down back to where that pump began. Inside day, signal day, giving us lower lows immediately in the Asian session, setting up for a 3-session setup. Universal entry criteria is met, coiling sideways at closing price for the parabolic collapse, closing out the week, the closing range of the week, an ACB template. ACB template because it ain't coming back. Same as gold. Day 3, Monday was the inside day. It's an ACB template blowing off, and it ain't coming back. This is one simple rinse and repeat inside day template opportunity. A very simple formula. Peak formation high or low of the week. Day 2 is the inside day. We get a range expansion triggering earlier in the day. Lower lows or higher highs for the pump and dump continuation ACB opportunity, a range expansion trade on day 3 after the market sets up with a well-engineered template. Doesn't matter what the instrument is, it's the setup. Day 1, day 2, day 3. Day 1, day 2, day 3. We can have the opportunities on the front side of the week. We can have these opportunities on the back side of the week. Now let's take an example and take a look at an example where we have the similar template heading into the new day. The setup is there, but let's see how price behaves. We have a market that closed in breakout on Tuesday. This is West Texas oil. Closed in breakout on Tuesday, peak formation high, closing back inside of the range, and an inside day on Thursday on the back side of the week. Now, this is an important example because often traders will say it was a first red day, it was a first green day, it didn't work, it did this, it did that. And my response always is, how did price behave on the day? We have a very well-engineered chart, but is this a pump and dump 3-session setup? Or is it a dump and pump 3-session setup, US, Asia, and London? A parabolic dump and pump in London and a low-hanging fruit continuation trade after the market breaks out. Markets only do 3 things: breakout, pullback, continue, breakout, reverse, and fail, or trade sideways in a trading range. Same template, just a different direction on day 3 on the back side of the week, the closing range of the week. Still an ACB trade opportunity for London session traders. Now, for New York session traders who have taken this trade, it's not an ACB, it's a low-hanging fruit trade, which again would just be targeting 100% expansion of that range as a potential profit target. Not Fibonacci, a 100% rectangular classical charting range expansion from the breakout of our box, our rectangular box. Same trade setup, just a different direction. Same setup heading in, but it's a dump and pump instead of a pump and dump. How does price behave on the day? What setup have you mastered? That's the important part. So if you're guessing, that's where you're going to run into trouble. What setup have you mastered that makes it simple and rinse and repeat for you when you get a signal day? Today we talked about inside days. We're going to go over first red day and first green days in the next video to differentiate an up day versus a first green day setup,
or a down closing day as opposed to a first red day parabolic trading setup. And we have another example on the indexes of where we get our inside day on a Friday. Inside day on a Friday, a peak formation high on Thursday, a peak formation low of the week on Wednesday, day one, the reset day on the back side of the week. But on Monday, we get another inside day. Now, on page 74 in the playbook, we talk about the double inside day. It's a rare opportunity, but it can be an indication of a potentially explosive move. We get our initial range expansion in the London session, and then the pump up into the low of day level for the collapse at the New York Open. Pump and dump ACB opportunity, part of a larger time frame pump and dump template with double inside day signal days. How does price behave on the day? In the next video, we'll go through first red day, first green day, and then following that, we'll look at 3 days of breakout traders and the day zero templates. Knowing what a best trade candidate setup is versus just looking at a signal day and trying to take a trade. Which setup have you mastered? Keep it simple, rinse and repeat, so that you can reproduce your results consistently and scale them up in size. Have a great day, traders, and may the markets go with you.